What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is October 13th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to do a big video today. I want to spend some time to talk about the 3 core reasons why we've continued to stay grounded in our bearish thesis for Bitcoin, even after being bullish on Bitcoin and risk on assets over the last decade. I want to spend some time to explain why this is beyond just analyzing price. I want to spend some time to talk about those catalysts that many people may be bullish about, but try to offer a fresh perspective. So the 3 things we're going to talk about today, I think, are things that you need to keep on your radar. And if you happen to enjoy today's video, you can get something out of it, consider dropping a like. It's one of the greatest ways that you guys can support the channel. But let's go ahead and kick off the conversation. All right, so first off here, before we dive into those 3 things, I just want to quickly run through the price action, guys. Again, if we just turn off our drawings here, if we look across the board at practically any asset, whether we take a look at the leader here, which is Bitcoin, we can see that both Bitcoin and altcoins are showing signs of weakness here. Again, we've talked about this enough in our previous content, but you can see it here in Bitcoin. We have not been able to make a new relative high since back in July, and we've been pretty much flat here since back here in March of 2023, and right back where we were back in May and June of 2022. No serious price acceleration as we've come up into this range that was prior resistance back in the past. But if we just take a look here at total 2, which is measuring everything excluding Bitcoin, continuous lower highs and lower lows, barely holding here around this $500 billion range, which looks like it's ready to snap. Especially when you look at Ethereum on the monthly chart, which broke a year-long bullish pattern, an ascending triangle that should have been the giveaway moment for Ethereum to break past 2,000. We can see BNB here as well, breaking through a multi-year line of support since 2021, and its 5-year-long line of support since back in September of 2017. Actually, excuse me, 6 years now, a line of support. And XRP setting a 3rd relative lower high since its highs back in January 2018. Not catching the bid and looking like it's ready to come back down into the same capitulation line, down towards 15 cents from its current price at 48 cents. So the altcoin charts are not looking good. Bitcoin's not looking good. What's really going on here? Because over the last year, we've heard a lot of positive stories that could potentially save Bitcoin and crypto. One of those stories that we've heard a lot about is a Bitcoin ETF. And I want to spend some time to break down this conversation here because we've talked a lot on this channel about the misinformation going on around ETFs. And trust me, I've been there, guys, and wanting a Bitcoin ETF for a long time. I wrote a letter directed to the SEC in 2018 asking, alongside so many other people in the crypto space, about a Bitcoin ETF. Essentially speaking, I want to go ahead and talk about the reality here because what we may want doesn't always turn out to be the case. And even though maybe it may feel like a Bitcoin ETF is inevitable, I think it will come one day. I think at the same time, we need to understand that the SEC has a vehement position against crypto, and they are going to do everything, as they have done for the past few years, to delay and delay and delay and keep finding excuses, keep finding legal avenues to continue delaying this Bitcoin ETF until public sentiment gets big enough. And right now, the public sentiment isn't there, guys. I want to be very clear about this and spend some time for it. While people may want a Bitcoin ETF, the SEC has been able to get away with either doing one of a few key things. First off, constantly delaying ETFs, utilizing the 240-day window of constantly delaying whether or not to approve or deny ETFs. So, for example, over the past few months, we've had some of these applications that came out back in, say, July of this year that could be pushed out as far as March of 2024. So going into Q1 of 2024 before they'd have to make an ultimate decision. And even from that, they can reject these ETFs. A lot of people have a big misconception around the Grayscale case that this was an absolute victory for Bitcoin and pretty much guaranteed that the SEC has to approve essentially these ETFs because of the reasoning the SEC provided was not good enough. At the end of the day, the SEC can find any excuse in the book, and they can go through the same litigation, long out, drawn out legal process to continue making their case. And it is going to take multiple months, potentially a year or more before this actually goes through. Even if all the companies out there push the needle here, the SEC can continue to make excuses. It can continue to reject ETFs on other bases. And because of that, we need to be open-minded to the idea here that this ETF may not come around for a very long period of time. Now, I know some of you out there will disagree with me on that. I'm not even here to say that ETF is not likely to come sometime in 2024. I wouldn't even really stick my feet in the ground and say that that's an improbable thing to happen. That could very well happen. But the next thing I want you to think about here is that even if the SEC eventually does get towards a position where either it changes its mind or has to eventually forfeit in, and the legal structure essentially leaves them having to give basically pseudo approval to Grayscale and eventually all the other ETF providers for Bitcoin spot ETF, right? While this may sound like a very big deal for the space, I want you guys to consider, what if there is not the significant demand that many people think, right? This is a really important point to consider here, guys. Again, just taking a look here at Bitcoin, if you take a look at any of the market statistics out there, whether it's trade count, the amount of people trading in cryptocurrencies, overall volume and activity in crypto, fundamental development of projects in crypto, not just around altcoins, but even around Bitcoin, new startups and businesses, and also, as we'll talk about later on, some of the key charts we're going to discuss in a moment, we're really not seeing an extensive amount of demand here for crypto. I understand a lot of people here in this space have a fundamental belief that Bitcoin is a revolutionary technology. And outside of that as well, that it is almost destined. It has a destiny to become the next digital gold and potentially even surpass gold one day. And sure, I don't doubt that Bitcoin could get there if it continues to work as intended as it has over the last decade. Having a fixed supply cap currency in this case, or I guess a digital gold, many people see it as, is a really valuable asset potentially long term, especially in an environment where there's massive money debasement, right? However, we'll talk about later on that isn't really the case right now. We're not getting massive money debasement. And I think that explains a lot of the stagnation in Bitcoin. But I, again, just want to come back to this point here, really fundamentally here, that there may not be such extensive demand for Bitcoin here. And there's a couple reasons I want to say this. First off, we can take a look here at the charts. If we take a look at some of the avenues where people could get exposure to Bitcoin outside of traditionally purchasing on Coinbase, so we're talking really about like institutional avenues through brokerage accounts. I'm talking about what hedge funds would purchase, money managers, all types of different things, family funds, and even traditional investment bankers, right? If we're talking about essentially getting that allocation towards pension funds or retirement accounts, then we need to see some early stage signs of this if there really is a likelihood of a Bitcoin ETF or that there's some demand for it, right? And I'm going to get towards a really important point here, right? We've seen Grayscale, for example, right? Grayscale's discount, which was continuing to expand since December 2020, down towards minus 48% at the absolute lows. This was, if we pull it back here, analyzed over the last year, the absolute lows were around 48.8%. We've made some serious progress here in getting out of that discount range. And now we're only at about a 16.5% discount, a huge improvement. And I will give it there. I want to make sure that's clearly stated that that's a huge improvement from those prior lows. It makes sense to some degree. A 48% arbitrage opportunity on Bitcoin is something that eventually someone's going to capture, especially if Grayscale itself has not diluted its Bitcoin that it claims it owns. If it really does own that amount of Bitcoin, then yes, it's probably good to take some advantage of that opportunity. But still having this discount here showcases one thing. It showcases that either in this case, a Bitcoin ETF is not likely to get approved. This should be at 0%, if not at a slight premium, as people are anticipating that event, if it's a slam dunk guarantee, or worse off here, maybe even a Bitcoin ETF is going to get approved, but there's not the demand for it. And that's the important catch-22 I want you guys to be aware of here. Again, I would be all for a Bitcoin spot ETF, but I gotta tell you this, if that was happening, you'd be seeing this discount clear up much quicker, and you'd be seeing this get into positive territory really, really quick. If there was some insider guarantee that BlackRock was guaranteed to have an ETF, or if Grayscale won its case against the SEC, or that the dozens of other applications were just guaranteed to happen, you'd see this thing skyrocketing higher. So it either is guaranteed, and there's not the demand for it, or it isn't guaranteed. Right? This is the key thing I want to signify here, guys. With Grayscale trading at this discount, what this means is that with the effective ETN product they own, which is in a way, many ways like an ETF, it does have actual spot Bitcoin backing it, at least that's what Grayscale claims. The key thing here to understand is that they have hundreds of thousands of BTC backing these shares, a huge chunk of supply. And if there is a discount like this, it means that there's an overglut of supply versus demand when it comes to those who are purchasing crypto or Bitcoin through equity products, essentially buying it through brokerage accounts, right? So essentially, there's too much out there. And unless we are going to get a Bitcoin ETF, or essentially if there's the actual demand for it out there, this is going to continue to trade at a discount here, right? Until there's the actual demand here to fill that gap. So I'm just trying to make this point here. And again, the one point I want to bring up here is not just analyzing one chart like GBTC. Take a look here at the MicroStrategy BTC ratio. We've had some definite improvement here since back in March up into July. But with Bitcoin's price, we've also seen a continued deacceleration here in the premium people are paying for MicroStrategy. And again, let's just take a look here at the MicroStrategy stock price here. You can see here again that we were able to break through a line of descending resistance here, but we're not able to hold it. We're continuing to fade through. And it's looking like we're about to snap below the same lows here from January 2022 and move lower here. This is not a good sign to see here. We want to see that previous ranges of resistance are becoming support. But unfortunately, we're not really able to hold there. We're breaking through it many times. And it looks like we're ready to snap here if Bitcoin moves any lower. We've been calling for this for some time in the Dash report here on the channel. We've been talking about this reality that we need to face, that Bitcoin may not lead over the next few years. It may not be the continued best performing asset over the next decade. Essentially speaking, if we think about it from a fundamentals perspective, we not only can analyze it here in the chart, but we also have to consider the fact that there are a lot of people already out there in the United States who, if they want exposure to crypto, have set up a Coinbase account. They've gone out there and purchased crypto. They have exposure to Bitcoin, altcoins, you name it. There is already a lot of participation in the world into crypto. And in most economies across the world outside the United States, there are already ETF or ETN products that you can put into any various retirement accounts. And because of this, we need to be realistic here about how much more money is going to flow into this space, because the risk appetite may not be there, especially with point 3 later on, which we'll talk about in a bit. But before we get to that, I want to spend some time to talk about the next biggest topic that everyone brings up, the destined Bitcoin halving event. Now, I understand why people are bullish on the halving event. It is never going to be a negative thing for Bitcoin's price action. I'll say that outright. The halving event here is a great thing for Bitcoin's price appreciation. It's a positive thing. But the question is, how great is it? How much is it going to support Bitcoin's price here? And can it be the bull market catalyst it was in 2020 and 2016 and so many other periods before during these halving events since the first initial halving event, which reduced the Bitcoin block size from 50 to 25 Bitcoin per block reward, right? So let's consider this here, right? Essentially, for those who don't know, the halving event, every 4 years, there is an event where essentially the Bitcoin block reward, the amount of Bitcoin minted every 10 minutes when a new block of transactions is confirmed on chain and paid out as a reward to miners, gets cut in half. And essentially, people tend to think that this has a similar effect each and every time because you're essentially reducing the inflation rate in half, right? So for example, when we went from 50 to 25 BTC, that was a halving in the inflation rate. And on top of that is when we went from, say, in this case, from 25 BTC to 12.5, that's another halving event reduction. But there's a big misconception here. That halving reduction, while it is, yes, technically declining the inflation rate in half, the problem is that that inflation rate reduction in nominal terms, in real actual impact of terms, is getting weaker and weaker and weaker over time. And this also explains why Bitcoin has had diminishing returns over time. It doesn't expand as rapidly as it has in the past. I want to go ahead and utilize some math here to actually demonstrate this point. So if we scroll down here to the current Bitcoin block subsidy, right now there's about 6.25 BTC that are minted every 10 minutes. And that might sound like a small amount, might sound like a large amount. Either way here, that's what gets minted every 10 minutes. Well, with the new halving event here, that number is going to go to 3.125 BTC per block. So I want to kind of scale this out here in macro terms, right? What's this going to look like if we take this on an annualized basis? Well, I've crunched the math here essentially. If we're taking the 6.25 BTC that are minted every 10 minutes, and now we're going to 3.125, essentially over an entire year, that is going to mean 164,250 less Bitcoin minted every year, or $4.4 billion at current market rates of Bitcoin hitting the spot market, potentially from miners selling it in order to cover their operational expenses for electricity, for the computer hardware, right? And I understand not all miners are selling that Bitcoin. I get that, But the argument of why the halving is bullish is because there's less miner sell side pressure. There's less supply on the market, right? So I want to go ahead and just play the hypothetical best case scenario for the bulls here, that all those evil miners are selling here, and we want them to make less and less so that price appreciation goes up, right? So let's just keep that as a mental model here. $4.4 billion less Bitcoin. Sounds like a lot. Well, if we take it into a daily time frame, that's 450 Bitcoin less per day, or essentially at current market rates, $12 million less of potential sell side pressure. May sound like a lot here, something that even could kick off a new bull market. But why these numbers might sound very big when we consider them against the valuation and the size of Bitcoin as a market, it starts to not look so optimistic. We essentially just consider Bitcoin's market cap here and take a look at the current valuation of it as an asset rather than the entire crypto market. Bitcoin right now is sitting at a $523 billion market cap, nearly more than $500 billion in market capitalization. So if we take that $4.4 billion figure, which sounds like a lot, we really start to realize that it's not even a percentage of Bitcoin. So a much more important question we need to ask ourselves is not whether or not the halving is going to save us, right? We need to understand whether or not the halving reduction, which yes is a benefit for price, is going to be enough to counter the imbalance between buyers and sellers. That's the ultimate question here. And that has become foundationally a much bigger question here, especially in the current environment we're in right now. If there are more market sellers versus buyers. Now, I'll step back here for a minute. It's important to know that there is always a trader on each side. There's always, if someone's buying Bitcoin, someone's selling, and vice versa. Someone's selling, someone's buying. But the important thing to understand is that what drives price in either direction is market buy orders. You can have all the bids in the world supporting price, or you can have all the asks, only willing to sell Bitcoin at a certain rate. But if you don't have the market order flow to drive trend in either direction, I'm doing all these things with my hands here, essentially, if you don't have that market buy side pressure, you are not going to have a new bull market. I'm just telling you guys that as an honest friend here, right? No matter how we feel on the narratives and stuff, that's markets 101. You need that market buy side pressure. And a lot of people argue that the halving event causes essentially this acceleration. We've actually talked about it for years, how the halving event actually impacts Bitcoin. It can't be priced in at the end of the day because that market sell side pressure only gets eliminated finally when the halving event actually happens, right? So that changes the day-to-day either imbalance between more buyers or more sellers, right? So it will help it. But the question is, if we're entering on a risk-off environment here, and that additional removed sell-side pressure is not so much, is it really guaranteed to drive Bitcoin into a new bull market? That's the question I want to ask here. And I got to be honest with you guys here, I don't think so, because with each halving reduction, it gets weaker and weaker and weaker here. As we're going essentially from an inflation rate for Bitcoin in this next halving event here, from the current rate of 1.74%, which is already relatively small in the grand scheme of things, down to 0.84 or 87%. That's not very big. That's not a huge benefit for Bitcoin. And I think that from here on out, what we're going to find in this halving event, and trust me, we've been bullish in all the previous halving events in the past, right? I think we're going to find in this halving event, it's not going to have the impact people are hoping for. We've got to be realistic, guys. There are a lot of people out there who are already well exposed to Bitcoin and may very well, with their sell side pressure, outweigh any potential benefit that we've experienced from, say, this past year that we're looking forward to in the halving event, right? The sell side pressure may continue to grow here to completely neglect any benefit from the halving event. And that can lead price essentially where if that sell side pressure continues to accelerate and there's not the equal amount of buyers coming in, right? And the halving event's not enough, price can decelerate. It can start to move lower. So it's a big point you guys need to keep in mind here with the halving event. It's what 98% of people won't tell you. Most people will tell you the halving event is guaranteed to drive the next bull run, or they'll just say that it's a really positive thing and Bitcoin's going to go up because of it, because it's always done that throughout history. But outside of all of this, guys, whether you agree or disagree on the last two things, last point I want to talk about here is the macro environment. This is overwhelmingly the more relevant topic. It is a more nuanced one. It requires some depth of understanding in traditional financial markets. And I know some people will say that crypto is an asymmetric asset. It's entirely isolated from what goes on in the stock market and the broader world. And I gotta be honest with you guys, you come here to this channel for an honest opinion. It's just not true. Maybe when Bitcoin was $1 billion, 10, maybe even $100 billion asset, it's in its own little world, right? I maybe could, reach across the aisle and say that might have been true. But Bitcoin's a $500 billion asset. And if we're talking about Bitcoin going to new all-time highs, mind you, for that matter, we're talking about Bitcoin going back towards above $1 trillion market cap. And I would assume people would expect that it's going to make some kind of multiples here. So essentially, if that's the case, then Bitcoin's coming up here towards around $3 trillion, 2.5, 4, 5 trillion, whatever it might be towards those new all-time highs. I don't know exactly what the price target might be, but that's probably the ballpark some people are talking about, hundreds of thousands of dollars for a Bitcoin price. And man, if you're talking about that, you're talking about multi-trillion-dollar market cap. Can that really happen here in the current environment that we're in? I gotta tell you guys, I don't see it happen anytime soon. Unfortunately, because the Fed not addressing inflation ahead of time and getting really on top of it and cratering it down to temporary deflation and putting us in a short-term recession, they spent a year delaying it, not doing enough. And unfortunately, that has just kicked the can down the road for Bitcoin and other risk-on assets to make new all-time highs. Treasury yields are moving higher and higher as the expected Fed funds rate is continuing to move higher as the Fed is now playing catch-up and having to tighten even more aggressively to some of the highest levels we have seen in the Fed funds rate in nearly 20 years. And once more, on top of that as well, this is continuing to not only shoot up bond yields, which makes a weaker argument to go on into risk-on assets, especially if those rates or those yields continue moving higher. But on top of that, the dollar itself, we can see that the dollar index, which we pointed out this summer, we expected a big deviation to play out here as we have marked in the chart. And since the dollar's just been in a clear uptrend, as this moves up and it continues to move higher, it means the dollar is more scarce. It means that people are essentially willing to pay more of a premium for the dollar here, as there's dollar-denominated debts across the world, and essentially other currencies across the world growingly weaker. This is again not a positive sign to see here for risk-on speculative assets like Bitcoin. The dollar is getting stronger. And I want to get back here towards, again, there's all kinds of different signs here. We're basically repeating to a large extent, although it's not that history directly repeats, but it certainly rhymes. We are repeating the same mistakes to a certain degree of what we saw back in the 70s and 80s, where monetary policy went rampant, and essentially the Federal Reserve just kind of started to appeal to markets as it usually does, and then it gets kicking the can down the road, and eventually it needs to play catch up. It needs to get out there and do the right stuff. And I think we're starting to see here that through the Fed's additional tightening, we're seeing the signs of what follows. We're seeing a recession come around the corner. We're seeing disposable income growingly weak among consumers. Credit cards are being maxed out. Consumers are growingly weak here in this environment. They're not having the same kind of income cushion that they had through the year-over-year increase in their income. We're starting to see that there's reinflation in the economy, as again, the Fed didn't do enough to capture it early on, and now energy prices are tailing up higher. And essentially, we're in what's known as stagflation. It's the step before an inflationary recession. Once we finally get that recession, I don't think it's going to bode too well for Bitcoin and crypto, because here's the important catch here. A lot of people say, Nick, but isn't that the great thing to look forward to, where bad news is good news? Isn't that when the Federal Reserve and other central banks are going to pivot, they're going to print a lot of money, they're going to lower interest rates to zero, and it's going to be back to La La Land and Lamborghinis for everyone? No. It's not going to be like that, guys. In my personal opinion, again, at the end of the day, you got to take it for what it is. No one has a crystal ball. But I got to tell you guys, at the end of the day, I don't see that happening. And the reason for that is because the Federal Reserve knows that if they continue to inject QE like they've done in the past, right? If people are expecting like a wave of QE, like multiple trillions of dollars like we saw in 2008 or here in 2012 to 2014 with one of the later waves of QE, and of course here in QE4 in 2020 during the pandemic, right? If you feel like that's coming, I got to be honest with you guys, it is very unlikely for that to happen. Because if the Fed does that, if they come in with such extensive liquidity, they will kick the can down the road further, and inflation is going to reignite even bigger. They will have, unfortunately, not only caused a recession, but they will not provide the ample foundation for things to actually get back to square one. but rather inflate or reinflate the economy, right? We're going to have all practically the negative symptoms there, some short-term relief, and eventually things are going to come crashing back down, and you're going to be setting yourself up for a depression. And I got to say, if that's actually what plays out, guys, that's the worst case scenario. I'm hoping here for a better case scenario. I'm hoping that the Fed is going to be actually smart enough to realize here that they've got to deal with it right now. And it looks like they've been, at least at the end of the day, albeit I think they could be doing it faster. At the end of the day, the Fed's somewhere in the middle when it comes to what it should be doing. It is dealing with inflation to some degree. And to prove it here, that we're not just going to see some massive wave of inflation, I bet many of you probably remember back in March when there was all these banks going under, especially a lot of the crypto banks, but SVB, Silicon Valley Bank, one of the biggest banks in Silicon Valley, funneling capital to the startup world, providing the banking infrastructure for all these companies, right? Completely went under. First Republic Bank, Silvergate, right? The list goes on here. Signature Bank, all these four major banks collapsed. Hundreds of billions of dollars of asset in each bank, trillions of dollars in actual deposits. Well, what did the Federal Reserve do? It came in with a temporary relief package here, about $300 billion. Not getting anywhere near those prior highs in the balance sheet, and a continued QT reduction, not pausing quantitative tightening at all, and continuing to raise interest rates in the meantime, and continuing to extend the dot plot and expectations for where those interest rates are going to go to the upside, and for much longer. Wow, I mean, you take a step back for a second and think about that. The banking system was almost collapsing, and the Federal Reserve only did the bare minimum. What could have been a massive cascade domino effect, and may very well continue to play out here, as the regional banks are at their weakest point since back in May of 2022. They are at the same capitulative range here where they were back between March and April. I mean, does that not signal that the Fed is willing to let some things break? I think it does. If you ask me personally, that's my take here, guys. And this is the cold reality. I don't benefit from being bearish here, guys. I don't have some 50x leverage short Bitcoin position. Don't listen to people who tell you that, right? I'm being honest and candid with you guys here, that we've been in cash for a long time, and there's good reason for it. Because while a lot of people out there want you to trade, they want you to go out there, use their leverage trading referral links and get liquidated and make them a ton of money through liquidation fees. I'm going to be here to tell you guys something that maybe doesn't benefit me myself, but at least lets me know that I'm being honest with you guys about my current take on markets. The next year or so is going to be difficult. And I don't think the halving event, the Bitcoin ETF, or the macro environment is going to save Bitcoin. Doesn't mean Bitcoin's dead forever. It doesn't mean I've given up on crypto. But it's not the time to go long Bitcoin. And man, if I look across the board in the altcoin space, the argument for altcoins is even weaker. The lacking fundamental innovation, the continued tolerance of the same poor user experience for crypto applications, the same hacks and exploits and outright scams and meme coins that just are an absolute embarrassment to this space, continue to persist. That's not me being dramatic. I bet many of you can probably relate to that. And when the most popular use case out there in crypto is trading, and more specifically leverage trading and speculating, what do we have to show for it after more than a decade of crypto being around? I don't see a lot of people being unbanked. I don't see Bitcoin helping people in developing nations like it was promised to. Why I got into this space and why so many other people got into it. And that's okay. Maybe it doesn't have to do all the things it was promised to do, but man, give us something to be excited about, some kind of use case. I was early to DeFi, guys, early to crypto, and I feel the least interested in it right now. That's really painful to say. It's really, and I think you guys probably see it there in the markets, as I mentioned, through trade volume and trade count. It's quiet right now. And I think the few people here in this space who still have that exposure are thinking, yeah, but let's wait for the halving event. Let's wait for the Bitcoin BlackRock ETF. That's going to save us. I don't think so, guys. I'm just saying that as a friend here. You got to know when to play your cards. And for me personally, I gotta tell you guys, I do not feel like sitting up at the table and betting big. We have yet to see any real correction in the housing market, real recessionary impact. But it will come. It will likely come here in the next few months, guys. Yield curve is uninverting. That's all the signal I need to know that, hey, it's time to batten down the hatches and get ready. Now, I want you guys to know here that at the end of the day, I'm not someone who's constantly negative here. I do believe that there are going to be opportunities out there in the market, that times will start to get better. But I want you guys to know here that it's going to require that we wait for the right signs. We wait for the right opportunities. One of the ways you guys can support us here on this channel and learn about some of those opportunities that may not be in crypto, right? We will be continuing to cover crypto. We cover crypto, equities, commodities, and forex not only here on the channel, but we do it in our Dash Report newsletter. This is a community of hundreds of members in the Dashboard community that are learning from one another, sharing information, and constantly learning and engaging about where opportunities may lie out there in the market. And I just don't want anyone out there to be pigeonholed into believing that crypto is where you should be 100% exposed. You need to have diversity. You need to be exposed elsewhere. And you need to be focusing on opportunities all across the board. We give a 360 perspective about all that's going on in financial markets and where we see the opportunity. And while Bitcoin has been relatively stagnant here over the past couple of months, there have been some sectors that we're watching that are doing well, or at a minimum signaling that they could be the next market leaders during the next bull market. When that may come, we don't know the exact date, but we've got some strong convictions as to what to look for when it comes to real capitulation, where it's time to really dollar cost average and go in big. Anyways, guys, if you're interested in that, you can get a 20% discount at the link down below in the description. If this video resonated with you guys and what may feel like a very quiet period of time, a very uncertain period of time, I hope this provided fruit for thought. And as always, guys, I don't mean to be a monolith of opinion, but you guys come here for a clear, concise opinion. I could say that it could go up and down, but that wouldn't really add much value. I love you guys. I hope you all are doing well. I want you guys to stay safe, trade smart. I'll see you guys on the next video on Monday at 6 a.m. Eastern Standard Time. And if you like the video, consider dropping a like. It's one of the greatest ways you can support the channel. Take care, everyone, and I'll see you all soon.